Thanks so much for joining us here on a Friday as we get closer to the weekend. I'm Marlin Bohling with you, your tour guide to the ag commodities. Well, as we take a look at our grain markets in this segment here, interesting developments here as the markets are starting to make a move a little bit. Let's take a look at what we have going on here with the futures trade. Currently in the corn market, we have July corn almost back to unchanged now. We're only a half cent lower. We're at $6.64 per bushel. Now, December is still a little bit weaker. We're down 3.5 cents. We're trading at $5.48.5 per bushel. I will remind you that we did not have any overnight export sales. On the soybeans, we have July now 4 higher at 15.37 1/4. I believe just a little bit ago I looked at it and it was up about 6. Quite a turnaround there. Look at where we had the low, 15.12 1/4 today. So we're off of that by 25 cents now. November up, now down a penny at 13.66 1/2. Well, let's take a look at what's going on also in the wheat market today. Currently in Chicago wheat, we have July down 2 3/4 cents. It's trading at 6.72 1/2 per bushel right now. Meanwhile, if you look at the Kansas City market, here you have July down a penny at 6.24. Of course, we had the wheat tour that wrapped up yesterday with very impressive results. And on the spring wheat market, we're higher there. July 2 3/4 higher at 6.98 1/4. Well, here to talk about it, we turn to an in-studio guest. How about that? We have Chris Swift with us today, and let's take a look at the market from Chris Swift's perspective on a Friday.
On a Friday.
What do you see happening here in the grain market as we get toward the weekend? Are buyers starting to test the water again?
Well, I'm kind of interested that they're not selling it off sharply. We haven't seen any kind of clues that would lead us to believe that we're going to see any kind of big downswing with the continuation of the weakening dollar. There doesn't seem to be any stop in that right there, flooding the markets with liquidity. So I think as we weaken the dollar, we'll continue to keep a firm tone under those grain markets. Events like weather or more or less imports, exports that we get, that will have impacts on it. But I think the undertone is still very much there.
Interesting. So when you look at the way the patterns are here, some folks have been saying, well, we're starting to get kind of oversold on some stuff, maybe a little bit, but it had been such a steep incline before that. Is it really that oversold or not right now?
Well, we look at it from, we rallied $1, we sold off $1. I think they're just putting blood in the water. So,
Really?
you know, with that much volatility that we've got $1 up, $1 down, I don't think they're going to let this market rest. Now, it may go up, it may go down, but I think to believe that we're going to go lower in volatility or begin a contracting type per trading range, I don't think that at all. I think we've got way too much demand in the market, and we will have significant events with weather and more or less exports there. So the summer's just now getting started.
Well, I'm fascinated by the fact that, you know, as we came out of the winter, a lot of analysts were saying, well, it's going to take record production just to even come up with enough to keep the pipeline full. And now here this week, everybody's saying, well, we have really great weather. Let's take the market down $1.50. I don't know. I mean, we're just barely starting to get the crop out of the ground in some areas.
Absolutely.
You know?
And, you know, we are going to get, I think, all of it out. The weather's been perfect for planting in most areas, a little bit wet in some areas down here, but most other areas have been really good. We saw a big performance. I think it was 81% of the corn crop, 78%, I think, of the corn crop was already in by last week.
Yeah, 80, yeah.
80.
Right.
So, you know, we've got it in the ground. We're probably going to get good emergence. And I'm not really looking for a severe drought to really impact it anything. I just don't think it's going to make it a bumper crop. And we need a bumper crop for the amount of demand if it continues at this rate.
And it wouldn't take that much. And, you know, we've been noticing there's a little high pressure ridge in the southeast that we're just kind of.
I like to watch what Tim has to say.
Eye on, yeah. Interesting point. Okay, we'll take a break right here. We'll come back in a moment and we'll take a look at this livestock trade heading into the weekend when we come back. Well, we have Chris Swift in studio with us, and let's take a look at the livestock trade. Well, on the live cattle board here right now, we are mixed. All right, Chris, we have the nearby June contract trading 47 cents higher. We're at 117.07. August is up 42 at 120.30. Which one has more volume right now?
Oh, August.
August?
Yeah.
Okay, 42 higher on the August. We're at 120.30, and that's 37 cents from our high of the day. And if you go out there into the winter months, you're actually 10 to 20 lower. Why?
You know, the premiums are out there, and we don't know if those cattle have been placed yet. So when we look at it October, those October cattle will just be being placed in May. So,
all right. Let's move on and take a look at the feeder cattle market. So far today, the August contract here is 55 cents higher at 151.62. And it's right basically about in the middle of our trading range today. The trading range has been 90 cents wide. The deferred's maybe not quite as strong. Can you read anything into that? Is it just kind of undecided because of what corn is doing?
Well, I think so, and we noticed the basis. If you look at the basis between the feeder cattle, they're having such a negative spread between the two. It's a big pitfall, and if corn continues to move higher, it's going to impact some decisions. If corn moves lower, it'll impact those decisions, but there are more feeder cattle and stockers sold in the month of July pretty much than any other because of those big Western video sales. So we got 5 weeks to those start, so if corn continues to move higher going into that time frame, we have to believe that it'll impact some of their decision-making process.
Now let's take a look at lean hogs.
Okay.
We're getting different chart signals from the lean hog market, and we're actually adding fuel to the fire here, Chris. We have July now up 287. We're trading at 116.42. That's a dime from our high of the day. We're $3, Chris. $3.25 off of our earlier low today. That's quite a trading range. Exciting times, and they're approaching going limit up here on the lean hog market. What do you make of this? Is it making another run?
Well, these are new contract highs for the July contract,
Okay.
so it's already making the run. And the only thing I can assume is the lean hog index has not pulled back any. We've seen it, I think it's at 111 if I'm not badly mistaken, and down slightly today, but still trading higher from the lows that we've seen. So I really, honestly, just don't know. I think it's just traders there that are short the market and they want to be out before the weekend's here.
Well, let's look for a few more clues. I've got some brand new cutout values here.
Oh, fantastic.
Hot off the press. Let's take a look at what they are, okay? Let's take a look at the beef cutouts. And they just came out. Hot off the press, $1.74 higher, Chris, on choice beef cuts at $325.92. Selects up 155, all the way up to $303.16 per hundredweight. And on the pork carcass cutout values, how about that? They're $3.03 higher at $122.25. Higher everywhere you look this morning on the beef and the pork. What does that mean?
Well, I think it's the processing. I think we have very slow processing out there, and we're just not able to keep up with the number of animals and the current consumer demand. We've seen several different states wide open again now with restaurants at full capacity, indoor dining, and we know that those restaurants have been purchasing that meat product for the past 2 or 3 weeks to get ready for these openings now.
Interesting stuff. Well, thanks for coming in.
Absolutely, glad to.
Good to see you once again on set, and you're welcome back anytime.
I appreciate that.
That's Chris Swift. He's with Swift Trading in Nashville. Tammy, back to you.